Today we're going to talk about how to stop missing out on some of your best trading setups. Stay tuned, traders. We'll be right back. Today, traders, I'm Stacey Burke from Stacey Burke Trading. Beginning of the week, time to start fresh. Last week, a lot of great trading setups. Some traders have already seen the results in their improvement, and again, we focus on constant progress, 1% better every day, every week, whatever that is for you, going at your own pace. The biggest goal is to develop consistency in your trading with our simple 50 pips a day approach, keeping it very simple, right down to the timings in a very tight window. Obviously, we know there's trading opportunities that come outside of that window, but in terms of developing consistency, learning how to master your craft, mastering the highs and lows, learning what the smart money is doing, putting that intensity and focus into a small window, learning and building on that each and every session. As we've seen, there's plenty of trading opportunities, and it's not about necessarily trying to get as many pips every day or every week out of the market. It's about developing that consistency in your approach, in your process, in your execution, narrowing down the variables, learning to master your trading setups for buying low, selling high, or trend trading, and then learning how to scale them up as your results support that indication to do so. So today we're going to talk about a little trading hack, how to improve identifying your best trading setups in live time. And one of the things that I encountered over time was that I would notice I would get some trades, get into some good opportunities, and later would go back and review the chart and realize that the really good trade setup was later, or there was a better trading opportunity on one of the other pairs. And obviously I talk about following the 6 pairs, and in live time you're looking for the criteria as the day unfolds from the hard right edge, which pairs possibly you're starting to identify with setting up out of your playbook with one of your A+ trading setups, again for either buying low, selling high, or if it's a trend trading day, for positioning yourself in a trend possibility. But today we're going to review how to quit missing out on some of the best trade setups, best trades. And again, last week, we talked about this in the last few days. Why are some traders seeing the trades set up, taking the trades, getting a good profit on a trade, maybe making some mistakes in managing that profitable trade, but identifying the trade, taking the trade, and learning from each trade? Other traders aren't seeing the trades, and other traders are sort of seeing them, but they don't have the confidence yet to pull the trigger and don't have the confidence yet to how to execute that process throughout from beginning to end. And again, we talk about keeping it really simple. High and low of the day, big picture structure, timings, that 12 candle window, as you've probably seen in the majority of cases, every time the market opens, there's a 50 pip move, whether it's a stop hunt back in the other direction, a breakout trade, a reversal, a trend trade, whatever they may be. When they open the markets, they move them. So today, I'm just going to go over a couple of simple ways to stop maybe missing out on some great trading opportunities instead of worrying about catching the move outside of the Asian high and low range, and stepping back again and thinking, using a bit of psychology, thinking about what's happening in the bigger picture with the bigger players, the smart money, and then ideally looking to position ourselves when the market is ready to make a shift and not come back to where we enter into the market. What are your best trading setups? Well, we talked about one of them yesterday. One of my favorite sell high setups is the 3 peaks pattern from a peak formation low. And one of the ways that I use to identify that is by setting an alert in my MetaTrader, which is really easy to do. I showed that in a previous video. We'll review that again today. But using the previous day's high and low, if you think about it right off the beginning of the day, what that also does is it triggers other time frame traders into the market. It triggers larger, bigger traders into the market. It triggers institutional money into the market. So when a high or a low of the day is violated and you come to the screen, you might all of a sudden take 6 pairs and narrow it down to 3 more high probability candidates. So I will set an alert in my MetaTrader, which obviously you can visually see if you have those areas marked off, but you can set a price alert in your MetaTrader to give you whether it's a message alert, an email alert, or just a sound alert on your computer. So it's important to understand with your best trading setups, again, if it breaks the low, maybe it's going to be a sell high setup for later for a continuation down, or maybe they're going to drag the market lower and consolidate it for a buy low setup if it's the low of the week. But again, it narrows that window of 6 maybe down to 3 more high probability candidates for one of your best trading setups. So number 1, setting an alert. We'll just make a note here. Set alerts for the high and low of the day. So be prepared before the session starts. So if you have an alert already set before your session starts, you might get tunnel visioned on one pair. So you might be following the pound USD, but you get a price alert going off on the pound Canadian because it's hit a high of the day or a low of the day. Now that market may have not broken out yet, and it may take out an Asian low or an Asian high. But again, if you have that alert going off, now all of a sudden you may start to pay attention to that pair and recognize that it may potentially be in a breakout or a stop hunt and setting up going into the London Open for, again, maybe a peak formation reversal or a breakout pullback continuation. So again, it's important for you to understand 1 or 2 buying setups and 1 or 2 selling setups and a couple of different trending setups. And again, if you go back and review your charts, you're going to see some of the same patterns showing up over and over again. Now I think intuitively I'm much more of a bearish person. I recognize selling patterns a lot easier than I do the buying ones. But again, as time goes on, you develop that playbook with 2 or 3 setups, and you start to identify with them and the key components as they're setting up what you need to see that will set that off in your head. But again, high and low of the day alerts. Now the other thing that I will do with setting alerts is I will often take 50 to 75 pips from a high or a low. So if the previous day has been an up day, I will set an alert 50 pips or 75 pips below the peak formation high of the previous day, and vice versa if it was a down day, above the peak formation low, depending on how far the market's pulled back. So if the market is pulled back 50 pips, I may put a 75 pip alert just in case the market extends further away, or 50 pips initially, come back later to see if one of those alerts has been triggered from in the Asian session, because that typically is about the amount of pullback in a reasonably strongly trending market. So again, not just the high and low of the day, but also 50 to 75 pips depending on the previous day's range, because we're looking at a quarter to 50% pullback. I hope that makes sense to everybody. So 50 pips is sort of a normal pullback into the previous day's range. So again, set an alert. So are we looking at a trend or a reversal day? So a trending day potentially has broken one of those levels, previous day's high or low, or extended beyond the 50% level of the previous day's range. When we come to the screen, then next thing we want to pay attention to is our timings, because we know that that 12 candle window is going to ideally, in most cases, give us an opportunity to position ourselves in the market for either selling or buying or trending. Then the next thing I will also consider doing, I mark them off on my charts, but I will set a price alert at profitable trade levels instead of the high and low. So if the market has broken out and I don't see a setup trading there, I will still set a price alert for that particular pair where an existing profitable trade is sitting. So if the market breaks out long, it triggers it. I come to the screen in the changeover, and in Asia they've already taken out the previous day's high and they're trending. I will set a price alert at an existing stop hunting level where a profitable trade is sitting if I'm focused on some other pair. So that pair may not have set up, but once it hits its stop hunting target, there may be something that evolves over the next hour, hour and a half, where it consolidates for a potential reversal or a continuation. Now again, we talked about this. If a market reverses, the fastest that's probably ever going to happen is in 2 candles. One down and one reversal. So that's 30 minutes that you will have, even in a fast reversal market, or in a situation where there's been a stop hunt or a weekly low, weekly high taken out. In most cases, it'll be a minimum of 2 candles. So that gives you 30 minutes to go and have a look at that chart. If you're on 15-minute charts, you've got time in between, because we wait for the candles to close. But again, it can take you maybe from watching something where you think there's a good setup and you may not be in a trade, to identifying maybe a more high probability opportunity to position ourselves again in the market for a reversal, or maybe a trend trade at the beginning of the session, or just do nothing at all. So, profitable trades. Set the alerts where profitable trades exist. The other scenario with that is numbers. As I mentioned, you can set them in Asia for 50 to 75 pips from a peak formation, high or low. But the other scenario is just setting it 50, 100 pips, whatever that may be, around those levels from the existing Asian box. So if you think in simple terms, the average stop hunt is 25 to 50 pips. So if you're having trouble identifying a profitable trade area or something like that, set the price alert for 50 to 75 pips. What's important about using the alerts is that, again, it helps us identify other opportunities if we become fixated on 1 or 2 pairs because we think they moved yesterday. You know, the pound New Zealand and pound Aussie, they move all the time. They're going to move today, so I missed it yesterday. I want to focus on that pair. Meanwhile, the pound Swiss, which bores most people, all of a sudden has a 150 pip day because we missed out and we weren't paying attention as closely as we should have been. And the other thing to consider using as setting a price alert for is the ADR. So again, you know, similar to numbers, on average, I always just roughly throw an alert in around 100 pips. If the market moves 100 pips, I'll start paying attention, especially if it's before the next session. So if at the end of the London session, if I'm done and I'm going to come back later for the US, I'll set alerts possibly from an extreme if it's been a trending day, but I know it's setting up possibly for a reversal. I'll set an alert for the ADR, the average daily range, if it hasn't been met yet. Typically I talk about 3 levels of rise and fall. So that could be, depending on the day, that can be a 75 pip day because they moved in 25 pip increments, or it could be a 150 pip day because they were moving in 50 pip increments. And again, a big ranging day typically will have 50 pip box movements, whereas the normal average day, they will be trading in 25 pip increments. So we have 3 levels of rise and we get a 100 pip move down in the US. Or we may get London and New York, and then Asia the next day moves up another 25 for a big move down in London. So these are sort of things that you can start paying attention to. But again, my favorite setting is the previous day's high and low of the day. So we come to the screen in Asia, we're inside the previous day's high and low, and in Asia they come out at some point and they trigger the previous day's high. We come to the screen for our 12 candle London window, and we know that this pair has already broken out of the previous day's range. So think about what's happening there. It's attracted other time frame traders, okay? And what's important about that is that usually triggers big money, smart money, bigger traders into the market and attracts them to either already being in because they've got algorithms or they've got automatic pending orders there, breakout orders, but it also attracts bigger traders who are now looking to potentially either position themselves in an opportunity maybe for a stop hunt low continuation, or maybe a three-peak lower double top peak formation for the week for the sell-off down later. But whenever we get the break of a previous day's high or low, and you have an alert to trigger that to your attention, that can potentially become a higher probability opportunity. So again, quit missing out on your best trades. Figure out what you need to see to help you prevent from missing out on those, because those are the trades, your best trade setups, that's where you want to be putting your risk. You don't want to be risking money all over on all these different low quality setups trying to chase pips. Focus on the highest probability setups, the best setups where you're prepared to take risk on, that are going to give you, 3, 4, maybe 5 times your reward back to your risk. And those are the trades, again, where you experience very little stress when they're right. So hopefully you got some value out of today's video, traders. Start setting alerts. Try it today. Set an alert for each of the pairs for the previous day's high or low, or just visually come to the screen knowing which pairs have done that. But again, once you're at the screen and you're focused, have alerts working in the background to trigger your attention to either the previous day's high and low on some of the other pairs, trend reversal setups, so the opposite at ADR, maybe 75 or 100 pips away from the current market high or low. Timings, again, come back to the screen in that changeover window, set an alert for the previous session's high or low of the day in case the market moves there in the US Open. For a stop hunt, it may trigger your attention for a better setup so that you can focus on your A+ setups. And again, existing profitable trades from the previous sessions where there's money sitting, if the market moves there in a stop hunt, they may consolidate for a big reversal for a measured move, but again, that can trigger your attention to a better trading setup. And again, like I said, you've got at least 30 minutes in most cases at a minimum before that market reverses. So if a market goes through a level on a stop hunt, you get an alert. You've got a half an hour to watch how that market sets up. If it consolidates over 3 pushes, you're looking at a minimum of 90 minutes, 60 to 90 minutes. So you've got time to think about that, watch the setup evolve, and then again, identify possibly the round number level that you're at, the peak formation for your risk control, placing your order into the market, looking at where that profit target is or where the next level of stop is. You're looking for 50 pips minimum. Set that, walk away, let the trade play out, and keep it as simple as that. If you're getting the results, you can scale them up. You can duplicate every part of that process. The 12 candle window, the high and low of the day, the stop hunts, the 50, 75 pip moves, profitable trades, all of that is reproducible each day if you come to the screen prepared. Keep it simple. Keep getting better. Make these little tricks part of your playbook so that you're not missing out on your best trading setups. Whatever works for you to make sure in live time that you're identifying the best setups for you to take. Have a great trading session, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at StaceyBurkeTrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.